Hello, guys. This is Paul McMillan II, and welcome to another back testing session. It is Sunday, August 24th, 2025. So let's go ahead and get started when you have everybody get to it. Okay. So the first thing we're going to do is just mark up external liquidity on the buy side and sell side of the fair time frame. So if we look here, we can actually see that there is some liquidity here. This candle kind of like got this leg here. So it looks like similar to equal low, so you know that there's liquidity here. So, so we'll mark that. Well, actually, we'll mark this fair value gap here. This is set down here. And we'll mark up 50 here. 50 right, 50 right, like here, and from here. So this is on the buy side. So now we're going to mark up external liquidity, internal liquidity of the down. So you can see we have external liquidity up here, price reacting to that very well. And then price reacting to external liquidity down here. It looks like prices in trading is trading internally. So if we look here, we see that price wiped out liquidity here. So we have some internal liquidity here that's been looking at the 37 side. And then you see that price wiped out some liquidity up here with this looking at that. So back something like that. But that's all we're going to mark up for the run out. Let's go to the 15-minute. Okay. So now it looks like that price is close to expand. Okay. We're trading internally here after this fair value gap. Straight down here. Well, we're in an overall fair market with price growth for structure. So really in reality, we're looking for price to be saving into this fair value gap. But what we're going to do is we're going to turn on our indicator. Okay. So notice we have liquidity down here. And we're ready for liquidity wave. But we have liquidity of this fair value gap. So the first thing we want to do is we first of all want to draw charge levels. So this will be on the 15-minute here. Go to the 5-minute. Running charts and running charts minute. So this will be at 5-minute. That's 11. Pull back 11 right. Go to the 3-minute. So do the good. The closest thing. So this is what you have the 15-minute. It is really a pullback thing. So price could pull back to this 50%, or maybe pull back to this line to trade into this fair value gap. Okay. But overall, we're bearish. But what I would want to see is I would want to see price wipe out liquidity here, and then trade into this fair value gap and then come back down. So we're going to wait for the liquidity rate first. Now, before we do that, I want to see let's go ahead and see a price from the thing. So we have some strength here. So, now, price kind of technically trading into it here. If they did come back into that here, come back down, we'll see if they can put the time to go. So you take the out of liquidity rate here. Okay. So we could ride price all the way up to here, exit out of here, and you trade back down and fit through that. It looks like we have some volume here, but this might be a great trading in. So let's take it up for a buy and see what happens. Now we've had strength here. So the question is, are they going to validate this fair value gap and go up, or are they going to respect this fair value gap and go down? So either for those case and we'll see. Okay, so these are we validate. Okay, we got a fair value gap here. It might be trying to raise the area, so you have a liquidity rate. But now this would probably be where liquidity rate here. You had a rate here, price went up and did a healthy pullback. And going to get another rate here. So this probably did a bit of good entry. However, we want to wait for the close of the fair value gap. But now let's see if we get strength. So we got strength there, but this would be an entry. But then we enter here, and we probably will be looking to trade into this fair value gap here. That's the price bid. So we would have done this trade, right? Again, between from here all the way up to here. This would have been, do the math, this probably maybe about 17 points. Yeah, 19 points times that by 5 micros, that's 950 pounds. Not bad, right? Now, let's continue from here and we'll do 1, 2, 1, 2, 1. So now, what we have to understand from this point is that we're in an overall fair market. Okay? So this fair value gap has to be traded into. So I would exit here and take my money. Okay? Then the $1 million question would be, is displacement going to displace this fair value gap, or is it going to be a rejection of the 10-1 gap? Now, we're overall bearish, so we have to keep that in mind. So then I would wait for price to react to this or to close above this. So let's see what happens next. Okay, so it's bowling down. Okay, now price is closing up. What this candle? Okay, so we will wait for price to displace this fair value gap, but we have a chops level here. So I probably wouldn't go further bullish until price closes above here. But now price pushed above here, and now we're ready for the next candle to close above and continue buying up. But now price is pulling down. It looks like we got a liquidity right here. Okay? It looks like it. But this might be a healthy pullback down to this area. So this is a fair value gap, and we want to see this close below and give us some strength to take it back down. And this here. But now price where this liquidity here, because notice we got liquidity here. So this might be a sign that price to both overdrive. So we are currently bullish for overall tokens. So when our price is pushing down, let's see if it validates this area. So this 15-minute fair value gap. Because this is a fair value gap. We'll see if it closes below this, we start to push back down. So we respected this and it pushed all the way back up. Now we could take this, but the safer way is to wait for this to close and give the strength to go further down. So now it looks like it gave us some strength that is pushing back. So this may be a healthy pullback. So since it did that, I'll go ahead do the buy. And then we will buy up to probably this liquidity here. Let's see if we put that. If not, we will take it the other way. And we pull that. So it might be going big. Yeah. So at this point, we would have lost the trade, and that's fine. But then what do we do? We re-enter. So we had a sign we had a fair value gap that goes below this chops. So then we remove our chops levels. I'll just keep this chops level right here. Okay. But then we got strength here, so we would say this down. So we stop loss here, and then target down to here. And then this would be everything. Then the back gap right here. So then we got trade resonate further. Right. So the rule of thumb is that whenever we lose one trade, price confirms the other production for the fair value gap strength, we take that trade if we lose the first one. If we lose the second one, more likely it's a seek and destroy. So even though we thought price was going to go further, we lost this trade, but we took this trade and won. Right? And so now, in this case, we want to continue one more time, and that would be another example. So in this case, when you move the fair value gap down here, because we're above this, right? And so now we'd be looking for price to trade up into here. So then we would put our stop loss right above here and target down this low here. And let's see if it does that. Do that. And we went down even lower. Okay. And notice it hit this fair value gap 50% perfect. So what we do, move it down to here. Right? If we got a near external liquidity, near term. And now we push our entry here. That was right up to here. Okay. So there we need ready for the tap in and probably go forward. But we're all bearish. So we hit our target there. And when we break down, we come back up to here. Now we might be at external liquidity. Price rate liquidity here. So then the $1 million question is price going to inject in and then validate this fair value gap? So what we're going to start to go forward. But let's see. That liquidity here. So you wait for the wave, which is probably the wave here. So this is our swing point here. That's what it looks like it's trading in. So now let's see the price for the purchase. One person strength there. All right, so for that fair value back there, a nice trade, but now I was still there. Let's see the bears 15.4%. So since it's trading to this fair value gap, it's probably 37. So then in this case, we wouldn't buy. There's liquidity here. So you got liquidity here, you got liquidity there. So you really need to see which price is going to break down. So we have strength here. Well, this might be real, but let's see if this will be there. So, yeah, take that back. Go right here, maybe probably down here. Close to the TP. You have to be ready. See that? What do you think is going to be next after this? Moving down here. Right? And so now we're looking for price to trade back up into the same. And the goal is at 13%. So then you put our stop loss right at this liquidity here. But they get above the 50. And they target maybe down here. So the price breaks above here, maybe even really above this strength here, pushes up, you might be going bearish. But let's see. All right, so now we got some strength here. This is the perfect example of a validate. So let's get back. It validated this here. So now my paper is ready to fully reverse. But this will be external liquidity rate here. Then it traded in to push automatically up. But now it's getting here. So that's stop loss here. And then we would probably target maybe out of this open maybe that's in here. See how much rejection we have here. Now the bulls now we made it all the way up to here, which is okay. But you have a fair value gap that is respecting here, so it's validating that. So then you probably would have got a short run here, but we probably would have got an exit out here. Got the WS and the 50 up here. So that's fine. So now we have a fair value gap here. Question is it going to validate this here that we're expecting to say? Let's see. Actually, has some close here. So we came close to hitting our target here. But now, question is price going to respect this and push on now? It's going to probably have to pass this fair value gap because this is still strong. In this case, we probably this might have been a good entry here, but it's still could be up there. Now this probably would have been a good entry here because it's goes in above, giving us strength there here, I believe. So this will be an entry here. We stand for this color back, expecting this area. And they would go up here. So there's probably here. But let's put our history more to it here. Well, this chopped. And then we need time to move this order block up here. Probably this high here. Right. So this was a healthy pullback. Now we probably, the only mistake we made is keeping our stop loss too close. So we probably should have pushed the maybe down here, but that's okay. But we respected this liquidity, the pumping, pushed up against it, and inspected it and pushed it there. So we had a stop loss still, if we would have had a healthy bid back, a pullback and go outside of it to here. So really in reality, that's price like that pulling back. From here all the way up to here. That is about, that is probably, that's every 20 things. That's a lot of money for buying my clothes. But this is good. So we'll do one more example of what we've done. Okay, so once again, on the 4-hour time frame, you want to talk about maintaining liquidity and external liquidity. So let me do it better. I think I can see it for what the value down. For now. So we're marking up external liquidity and internal, right? So you can see that there's external liquidity here because this was wiped out this previous low here. It was 25% here. But there was external liquidity on the 4-hour. External liquidity on the sell side on the 4-hour. Right. But that's what we're doing now. So now we see the fair value gap coming from all the way here, but this is probably more likely internal here that we're going to mark this. So the liquidity here is going to be under by itself. Now, that's all we're going to mark up on the 4-hour. Let's keep it very simple. Go to the 1-hour, mark up there and turn it. Okay? So when we analyze the market here, so we see that price respect to the internal pressure here. They're going to have internal here. See that? Say here, because we had a fair value gap here that price is taken to wipe out and then trade there. So we have liquidity backing out here. So let's mark that. So this is going to be on the buy side liquidity internal on the 1-hour. Okay. Then we see that price wiped out this previous low here. But then mark that out. This is going to be in there on the side. On the sell side. So that's what we're going to mark up for now. Now we go to the 15-minute. Okay, so here we can see the price reacted to externally. Now it's at internal. Okay. Now, probably on the 1-hour, so probably make this sell. On the 1-hour, I'll probably actually take a price that is swing 20,000. Okay. So now we go back to the 15-minute. So now we see that price is really trading internally at this point. Now the external is down here, but this is an internal thing. So now, from what I can see, price is currently there, but the growth structure here. But now we need to, when we see fair value gap expand here. And now we're going to go ahead and turn on our indicator. And now we want to mark up our chops level. So this is the most recent chops level that I see here for the 15-minute. Because price is that price is trading into this most recent fair value gap. It isn't worth the graph that we're doing with the current price. There's going to be the 15-minute charts. Go back there. Let's go to the 5-minute. actually, um, let me break up the rest. Let me do a 15-minute size level. And let's go to 5. Then we'll size level. There we go. Beautiful. So this will be 5. We could do something. Why they go up that. So we know that price is overall there. The could pull back as far as into these fair value gaps. And they continue like that. Could happen. So in this case, you see that price is trading into this level. Now, the $1 million question is, this is on the 15-minute, this is most decent shot there. We'll just keep that there, which is draw a 15-minute fair value gap here. This has a balance to trade up to 50%. And of course, if we take our bid from this amount to this amount, from this high to this low, it's close to the 50%. So it'll get up, get us down. But then, overall market. So we want to first wait and see if price is going to either displace this area by breaking up and going up to here, maybe getting all these open, or is it going to reject this area and continue to go down to extend really down here? That's what we want to wait for. You don't want to assume yet. Let's go ahead and play the B 13. They said this level is still setting down. We got strength there. Now it looks like it did a liquidity rate here. It's bigger than this one. There might be ready to trade down. What we're looking for confirmation candidate, no more, no less. There's no volume there. I wouldn't trade that with my volume. No volume. It's in a liquidity rate here. So, we got a little bit of volume here that might be a little something. That's it. That would be our entry right here. And then we move this down here. Because again, those step is liquidity rate, both fair value gap, the fair value gap closing straight. And now, go back to here. It's the reward tool. We'll put our stop loss here. And technically, you can put it here, but you're going to put it right here. Notice we got liquidity down here, previous fairly low. So I would target this. Let's see what price ends up doing. Okay, so it failed. Okay, that's fine. Then we take a loss, right? And that's probably close there. So where will we enter if we lost this trade? Either if we right here, the close of the fair value gap. And now let's do this. Because yeah, that's what we do. But this is perfect because this is the 50% fair value gap and it displaced that. Yeah, let's put this back up to here. Okay. So now we probably will target realistically this area, but we could target this area. let's see. Now, we call it a target. So this probably would have been our exit here. So let's see how many that is, and then we'll see the price best from there. So this is yes, so this is for the 30. Wow. But yeah, 19 points talked up by 5 micros and $150. I bet. If you did 2 micros, they would have 2 micros, so uh, 19. No, they would have 3 guys. Not bad. So that's good. Now, so I probably would have printed out of here because I see a fair value drop. Price spread. I'll still be both after this and go back down. But we're overall very small. So, I mean, we're currently good. So now the question is price going to push up and drop up as high and build up to here? So what we would do is wait for price to validate this fair value gap. That's the $1 million question. Is it going to do that, or is it going to come down and validate this and go back down? Let's see. Let's see. Here's the liquidity very here. Right? So that might be a sign that we need to see the cold fall. Now, this is all liquidity right here. The price might be ready to push on down, the possibility. So we need to keep that in mind. So 15-minute fair value gap here. So now we need to see strength, and we need to see really close below here. That'd probably be the best thing. But it's a possibility that it might still be supposed to go further up to this liquidity. So you need to see that. Right now we got 12% bulls on the order block because of this wave. Price might be ready to post this, but there's no volume there. Okay, now you have some strength here. This might be good here. So this might make sense. Not really a lot of volume, but we might be able to get away with this. So then I would basically be targeting this liquidity, which is not, but it might be targeting this fair value gap here. You see that here. So we'll just put 15-minute fair value gap here. You'll see a price comes. You'll see it if they're going to go this way. So we're either going to get this target here, or to here. Let's see. And get our target. And then it's good. So from here, go up to here. Yeah, that was about 30 points. 30 points. 30 points times 5 micros would have been $1,500. Insane. It would be a T. 30 points times 20 would have been $600. So you see why we do follow strength. And we trade fair value gaps off of liquidity days, whether it's off of external liquidity or internal. But now it looks like prices at external. Well, this might be close to external. And it looks like price went up a little bit further. So could be rolled. If you're in this, if you're in the appropriate entry here, but yeah, it really, you see what this kind of looks like here. This might get an okay. This was a liquidity wave, the price pushed up and then a doji. So this might have been okay technically. Let us know. So then if you had to clear, probably it up to clear, this is still on liquidity. And he did it up. So you know. So yeah. And then here, you really have liquidity wave here. Where they wiped out this previous low here. So this would have been a swing point of experiment. Actually putting it down here. Then you have to use the liquidity wave here, so you can project it here, push it in. And so that at this point, we're going to see a price is going to either manipulate this fair value gap or displace it. So what would we have? Yeah, displacement. And so then this would have been our entry here with stop loss here, and we probably could, if anything, maybe probably just a 50 here. But there's an order block here, so you have to keep that in mind. So if you took this trade, you probably would have either entered out here or continue to hold it, but I think it's going to be sell. Yeah, this makes sense. So he could have took that trade out of here and more likely things in here because you saw this order block. And then in this situation, you enter out here, probably like right here. And then the next candle, rejected it. And then we will wait for a close with this. Then we will take this trade. And then guide up to here. Yep, you want it. So, that's good. But yeah, that's it for this session, guys. And see you guys later.